And I don't know about CRM, but if bellwethers like Intel, Oracle, IBM are taking share in the cloud space, I'd be a little bit concerned. So although it was below normal seasonality of as customers continue to report lean inventory levels. So how does this impact the tech space overall?
Right. Well, it's interesting. Intel is trading at a new 52-week high today. Who would have thought? After a move almost 30% since its lows 2 months ago on August 19th. So the report was impressive because the stock is moving higher after a big move, that it already made a big move. And the statistics from the industry aren't very good. If you look at book-to-bill ratio, it shows new orders for semiconductor equipment have been really poor. Chip prices are falling still. So the company's ability to generate profits in this environment shows that a large technology company can still make a lot of money even if things are slowing down.
So even though a bunch of brokers took up their numbers this morning, there still can be a bearish case to be made here in the stock and semi space overall. So how would you set up an option strategy to reflect a range-bound bias or to protect existing longs?
Right. Well, with Intel, it's a great stock to trade because the options are very liquid. There's a lot of activity in these contracts each day, and they're also listed at one strike increments. So you can do a wide range of trading opportunities if you're bullish or bearish. One I would look at now with the stock after a big move like this, the earnings are out, maybe we'll expect it to drift lower. There's a gap on the stock chart. Maybe a butterfly spread where you can take a November calls, maybe a 24, 26, or rather a 22, 24, 26 butterfly spread, which targets the $24 price. It's around $24.50 now. So for it just to drift lower, and you pay about 80 cents for that and make potentially $1.20.
Okay, so if you have an existing position that you're long with, what would you do to protect that?
Well, if you wanted to protect some of your gains after a big move like this, you could do a put spread. You could buy out of the money put spread, maybe a 24 or 20 in the Novembers or Decembers, if you're concerned about something in the short term. Or you could buy longer dated puts as a downside hedge.